As mentioned before, support and resistance is the most basic form, but basically support and resistance does turn into other things, and it kind of builds on top of each other. Kind of like any type of class, whether it be English, whether it be math, whatever. There's different levels, and each helps and assists with the next level that you learn, basically. So now we're going to be talking about trends and channels. Channels is basically whenever a stock is trapped in between a level of support and resistance, constantly bouncing back and forth between these two levels. Not necessarily making new highs and not necessarily making new lows. It's just stuck between this range, which you could trade. Trends is basically, again, like if it's an uptrend, how we talked about in the past, but there's specifically trend lines that you could draw in which the stock bounces off of this line. It's angled support resistance. So if it's an uptrend, for y'all it's like this. Let me draw it like that. There you go. It goes up, hits this line, bounces up, hits this line, bounces up, creating those new higher lows and higher highs, kind of like how we talked about when we're talking about trends. So we're taking a concept of trends, and now we're turning it into a way that we can actually get in and make trades based off of that. So let's go ahead and look at Snapchat. This is going to be our first example, and this is for channels. So let me go ahead and draw my support and resistance. As you can see, this stock has been going through a hell of a lot of shit, man. But if we zoom in specifically to the summertime / early fall, we can see that it was basically trapped within this range. So if we were to draw a support line and a resistance line, I'd probably draw a resistance about right there. Support about right there. There's a few wicks and there's a few lines that do go above it. We'll talk about that here in a little bit. So basically, where do we see our line being respected at? You could draw it up here, but I'm going to draw it right here. I'm going to highlight the areas in which it touches. So you got 1, 2 area touches. So that would have been our resistance line automatically. You could argue that this doesn't count, but I'm going to go ahead and count this as 1, 2 areas, 3 areas. So technically, if you would have saw this, basically respect the line, you probably would have bought right here, would have sold up here. Bought back more right here, sold right here. You might have been convinced that it'll go past the channel, in which you could continue to play it if you wanted to, but there might have been other indicators or other reasons why it would have fallen back, in which you would have gotten out before it did. If you would have put a stop loss or a trailing stop, whatever you wanted to do, or you would have just took profits in the channel. You wouldn't risk losing any more money or making any more money. Again, you buy at the bottom of the channel and you would have sold at the top. And then from there, you probably would have waited for it to come back down. But rather than hitting this level right here, you gapped all the way down here. The next thing we're going to be looking at is trends. So the SPY actually had multiple trend lines that it followed, this being one of them. And this is over like a really big time frame. So you see it, this is the first point of contact, this is the second point of contact, and this is the third point of contact. So if you ever see it fall back to this line and it respects it and it bounces from that level, you would buy. So you see it hit this line right here, you probably would have bought some right here. You'd see it come back to the line, but ultimately it respects the line still, and you end up getting in. You probably would have sold whenever you felt comfortable with profits, which if you see in the future, this line right here, this 470 level would have been a pretty heavy resistance level, so you probably would have sold there. Then you see it come back to the trend line, you buy there, and you see it was at the 470 level, which is our resistance, and you probably would have sold right there. Then you would have got back into the trend line, again sold at the 470. It would have gone up a little bit more, but as you can see in the long term, it kind of paid off selling there. So it comes back down, respects the line again, coming to the 470, and you could sell right there. It's pretty simple. It's harder to do it in the moment. It's easy to say this looking back on it, but this is for instructional purposes to be able to show you. And also what's cool about trend lines is that you could actually have a trend line on the bottom and the top, so that way you know when to buy and when to sell, just like in channels. So let's go ahead and look at XLC. I already have the trend channel, I guess you call it, drawn out. And again, we want 3 points of contact, so we look at the top trend line, 1. You can count this as 2, but technically I'll just count this as 2 and 3. So I'm going to mark that off. 1, 2, 3. You look at points of contact, you count this as 1, 2. You could use this as 3, but it didn't touch. You could use this as 3, but it didn't touch. So I use this right here as 3. So we probably would have bought here once we saw it respected that line. Would have sold when it hit the top, which technically didn't hit there. You'd see it hit all the way up here. That's one trade. You buy the trend line, sell up here. That's two trades. Buy right here. Probably would have bought more right there. Sold up here. That's three trades. And once you see it fail this trend line, as you can see it did on this red candle, it closed below. If you would have bought right here again, expecting it to continue to go up, you would have got out of your position. And as you can see, it gets tighter and tighter as you go up. So you probably would, likely chances of you making money off of a trade like that would go down each time, as the gains that you would get out of it wouldn't be that big. So you probably wouldn't have gotten that trade to begin with. Maybe not even the second one. But yeah, let me check my notes, make sure I didn't forget anything. But that's basically trends and channels. Again, they're easy to notice once they already pass by, or if someone else draws them and you catch and notice them. And you can also take someone else's place as well. They're easy to draw out. Again, simple concept. There's 3 points of contact on a trend line, 2 points of contact for support and resistance for the channel. Yeah, so I mean, it's easy. You combine all the other stuff you learned together with this, and you can have pretty solid and decent plans.